Hello, good evening, and welcome back to GBS video lecture series on financial accounting and financial management. I'm Mohammed Ashik Khan, the managing director and the technical person who develops videos on various subjects. Today, I'm planning to start with introduction to International Financial Reporting Standards, introduction to IFRS. This series of videos, this is going to continue for several sessions, and this series of videos will be useful or applicable for students of ACCA, CIMA UK, CA Sri Lanka, CA England and Wales, and CPA and CMA and other accounting qualifications. Also, this video will be applicable and useful for people who practice accounting in the real life. So, with that basic introduction, let's go into the basics. Now, why we have to set up an accounting standards or why we need international financial reporting standards. One, the use and application of IFRS. Now, one of the reasons is national requirements. Now, if you take for example Sri Lanka or Pakistan or Qatar or Saudi, when they wanted to develop their own accounting standards, they need some basis, some benchmark. That benchmark can be this international financial reporting standards. And secondly, this, as I said, that is one of the international benchmark. This can be used for developing similar accounting standards and accounting practice for those countries. And then when we talk about limited liability companies or other financial institutions and organizations, when they prepare the financial statement, those financial statements needed to be complied with certain standards. That standard is IFRS. So one of the requirements is, one of the application would be, it is a regulatory authority's requirement. They make it compulsory to comply with IFRS. And every companies themselves needed to follow IFRS. So these are some of the use and application. Now next we will try to understand the standard setting process. So how these standards are being set. Well, the one thing you need to understand that the IFRS is developed by a body known as IASB. A body known as IASB, which is International Accounting Standards Board. A body known as IASB, which is International Accounting Standards Board, and that board only develops international financial reporting standards. What are the process behind the developing IFRS is this. Now there will be a consultative group whom will be consulting to the board of this IASB board, International Accounting Standard Board, who would be consulting them as to how should be the IFRS development process would be. And then the board will have a subcommittee known as steering committee. This steering committee will then develop the given any accounting standard. To discuss about slightly a background, let's say any given accounting issue, when there is an accounting issue, for that accounting issue, if there is already any given accounting practice or any standard available, or there may be no accounting standards available. In both cases, what could happen is that you have to look for a best accounting practice. In that case, the IASB will look in to see whether any given existing accounting standard available. If then the one question is whether any accounting standard available. Whether there is any accounting standard available. If the answer is yes to that, the next question is whether it is updated. if for any given accounting issue, already there is an accounting standard, and if that accounting standard is updated, no problem, we don't need to think about developing a new accounting standard. But if it is not updated, then we need to revise it. We need to revise the given existing accounting standard. Now, to give an example, IFRS 3, there is one accounting standard number, IFRS 3, which is business combination. This standard has gone into several revisions because time to time the accounting environment connected to IFRS 3 with other implications, this has mandatorily to be updated. Accordingly, the IFRS 3 went on to several revisions. So that is one question. Whether any accounting standard existing, if the answer is yes, this is the process. If the answer is no, then the steering committee will then develop a document called discussion paper. The steering committee will then develop a discussion paper. This discussion paper will be circulated to the public. This discussion paper will be circulated to the public. Now, suppose for example, let's say the population of the public is like this, which is given to circulation for discussion paper. It is given as a circulation for discussion paper, and then what happens? Now the steering committee will be waiting for the comment from the public. The public then, some of the public may reply, some may not, some may comment, some may not comment, and according to the comments they received, then they may go into a change, revise, amend the developed discussion paper, and then they will develop something called exposure draft. Something called exposure draft. If you understand, the scope is getting narrowed. The discussion paper is a wider scope, whereas the exposure draft is a narrower scope, which again will be circulated to another set of public. Again, remember, the population, the amount, the quantity of the public, or the percentage of the public, if for example, if it is 100% here, it may be 60 or 70%, or even sometimes 50. It is much less than the previous population. So then what they expect is, they expect a in return a comment as to how best the exposure draft, which will be applicable to this particular accounting issue. Then once the comment is received, the board will then look into all the different comments received from the public and the opinion and the suggestions given by these groups. Then they will issue the final document known as International Financial Reporting Standards. So this is the basic knowledge any accounting student who need to have an understanding on IFRS. Let's now look into the list of IFRS which we will be discussing in our session. So there are two different types of accounting standards. Actually, the standards issued by IASB are two groups. First group is known as IAS. First group is known as IAS. Second group of standards known as IFRS. This is known as International Accounting Standards. Whereas now International Financial Reporting Standards. Remember, at this moment, there is no IAS has been issued. Now, whatever the new standard is coming, all of them are named as IFRS. In IAS, we have standard number 1 up to 41. We have standards from 1 up to 41. IFRS, we have 1 up to 16. 17 is still underway. So we have up to 16. So in my next forthcoming video sessions, I'm going to discuss the every basics of every single standard, IAS 1 to 41 and IFRS 1 to 16. And just to give some list of IAS, the first one is IAS 1, that is presentation of financial statements. That's the very first standard that we will be discussing in the forthcoming sessions. Second one, accounting for inventory. And the third one is 7, IAS 1, IAS 2, I will note here, number 3, number 4, number 5 and number 6 are not there. Meaning, the IASB board has removed or eliminated those numbers. And accordingly, IAS 7 is cash flow statements. IAS 7 is cash flow statements. And then IAS 8. This one changes in accounting policies, estimates and errors. So we will be discussing all this under IAS 8. So likewise, this discussion will continue and we will have IAS number 41, accounting for agriculture. So this will continue like this, and then we will also have set of IFRS. Thank you very much for watching this video, and you will keep receiving the every next individual video sessions on each and every topic of this. Thanks a lot.